All right, so we almost got the actual breakdown of that consolidation, but way too close to close, which I was kind of worried about. We did exceed the market maker's downside expected move today, closing down 74 BPS. VIX up 9.37%. VIX 3 month up 4%. Gold pulled back again. So did silver. Oil down today after tapping 80 yesterday. Dow and Russell underperforming quite a lot. Dollar up almost 50 points, mostly against the euro and the pounds, but a decent amount against the yen and the yuan as well. Uh, on the yield side, 2 years at 4.977, the 3 month hit 5.4, 5 years at 4.6, 10 years at 4.6. 20 at 4.8 and the 30 at 4.7. That's actually quite a big move on the 30 over the course of this week. Broad commodities down about 100 points today. Still consolidating after that breakout last week. Hopefully continues to find support at like the 105 level. Yields turning up and dollar moving up into the end of the day. Correlation on the 1 month breaking down pretty rapidly and advancing over the breakdown in correlation on the 3 month. But both of them pretty consistent with the moves that we're seeing in VIX. Tech still outperforming by a little bit, and breadth coming down really hard. RSP down 113 points today. The USD JPY carry trade breaking out to new highs in leverage at almost 9x. This is a 20-year high for the carry trade, which is impressive, but it's keeping the forward yield volatility just under that breakout to positive, ending the day at negative 0.76, 0.62%. That could change in after hours, especially as risk premium is priced in on VIX futures. And we're still getting quite a lot more inversion on the 10-2 year. So tightening in that yield curve inversion and more demand for long volatility is basically what you can draw from this. Also, JPY USD carry trade massively over leveraged. Move continues to move up as bond markets are seeing quite a bit of a correction, especially on the longer end of the curve. A little bit of a reversal in skew, not very significant, and this is also yesterday's print. We may see a little bit of a continuation of this, especially with the weak close at the end of the day. Remember, on those weak closes, we can see overnight gap downs, and so it may be that, we see more and more participants carrying a little bit of a tail risk hedge. 34.99% of the S&P now below its 20-day moving average. Despite that, I think most of the Mag 7 are above their 20-day moving average, and largely that concentration is still holding the market up, despite the rest of the index failing. And a lot of short vol today. I know they didn't move vol, right? But correlation between VIX futures and cash VIX moved from negative 33% to negative 38%. So we are seeing a lot of that money being used to short vol. It's just that they're shorting vol against strong demand for long volatility, and so we're not seeing vol move a lot, but it is being shorted really heavily. And we are now pricing into the end of the day. I think for the first time since the bottom back in April, we're pricing in just a little less than one rate cut for 2024, which is, interesting. On the daily on S&P, today's failure saw us fall below trend. We were looking for kind of a topping position, something similar to this, except we're a little bit more dependent on GDP data here, but we did fail, and we are still trading within the range of last Thursday's drop. Breakdown below, I believe that's 52.57. We'll see at least the first signal of a correction, at which point we will look to closing that gap from a couple weeks ago. We'll look to the EMA 30 and the MA 50. Breakdown of the MA 50, and we're going to be looking for test, down here at, 5100, 5190, or 5000. So quite a lot of range opens up if we're able to get through these small pockets of resistance up here near the money. Also, today we did close just above that. Once again, we just closed just above that monthly level at or weekly level at 52.64. And that's where we start to confirm a reversal on the longer term time frames. Oops, wait, 52, yeah, 52.64.85. I don't know why that's there. Sometimes these move around or I drag them by accident. So yeah, still closing just above that, although we did test below earlier this morning. A close below that is what we're looking for. And then we'd look towards the like 52.11 level, 52.25 for continued confirmation of the downside move. 5,000 end of week? No, that would probably take a little while, but it would be the start of a correction. So maybe something more similar to like these, get like maybe 1.5. I guess we could get like 2%, but I think a bit early in the month for us to see a move that big. Closer to OPEX or into OPEX, possibly we would see a bigger move on the weekly, especially if Charm were to start to flip negative on the like monthly and weekly contracts, which we're not super far away from. So it's possible, but right now we're still very far from like delta neutral, and the path from GN down to delta neutral tends to be pretty choppy because of all the volatility. Anyway, thank you guys so much for tuning in. I appreciate it. I will see you all maybe tomorrow later in the day, if not Friday morning. I wish you all the best of luck handling the GDP print. Later, guys.